In this video, I want to show you guys this strategy in the chart setup that I used to make $480, almost $500 in a matter of 5 minutes trading Tesla to the downside. Now, getting into this video, I'm going to show you what exactly was on my chart to start today. What exactly was I looking for? What was my thought process? And where did I kind of take profits and take my entries? So a couple of things that are going to be on my chart from yesterday is going to be the 20 period moving average. You guys know that it's on every single time frame that I like to trade. Doesn't matter whether I'm trading the 5 minute, the hourly, or the daily time frame. I'm never going to take off the 20 SMA from my chart. It gives me a good indicator as to where the momentum of the current stock price is going. Normally, if we're trading below that 20 period moving average, I will be looking for those short positions. If we're trading over, I will be looking for those long positions. Now, the only homework that I had to do was mark out yesterday's highs. Yesterday's high sitting at around 269.06. I'm going to take the top wick, whatever the high price is. I'm going to put that price level line on there. If you guys are using Thinkorswim platform, all you have to do is right click, add a drawing, go over to the little dollar sign with the line below it. That's going to add your price level, and you can drag and drop wherever you want that. Now I went ahead and put that also at yesterday's lows. So what I want to do is I want to create a range. I want to see where potentially is my top supply, where potentially is my bottom demand. Now, if we can break yesterday's highs, I know for a very good chance that we have potential to move higher. If we break yesterday's lows, we got a good chance at moving lower. Everything else in between, stocks are just going to go up and down. There's a big difference between higher, lower, up and down. So the next thing that I'm going to do is I'm going to come into the pre-market session, and I'm going to go ahead and I'm going to mark out the pre-market high sitting at 267.96. I'm going to mark out the pre-market lows sitting at 264.90. These are going to also act as intraday supply and demand levels that we can play in between. So for example, if you're taking a long and we're below the pre-market high or below the pre-market low, then definitely you want to take profits into those areas, as they're going to act as a level of resistance, and vice versa, acting as a level of support if you're playing to the short side. Again, look at the beautiful setup in my books, the way that I trade according to my strategy and how I'm going to, kind of use my charts and play the price action. This was an A+ setup. And the reason why it was an A+ setup, because immediately off the bell, we get a nice big red engulfing candle here that takes out the majority, if all, of the pre-market action and closes below the pre-market lows. That's checkbox number one. That's already a great, kind of action, or confluence to kind of take place, is that we closed below our pre-market lows. The next thing that I'm looking for is where are we at on the 20 SMA. In this particular case, we just closed under the 20 SMA. Now I have two check marks that I'm looking for that are already checking every single box that I need to look for a short setup. Only thing I need to do now is, if you see where we stopped right at yesterday's lows. Now, yesterday's lows could have acted as a very, very big demand zone for a nice bounce. Now, on that bounce, you got to be careful, because if you just go ahead and shorting into prior day's lows or going long into prior day's highs, you could definitely get rejected and retrace. So as I sat here, I looked at the price of Tesla, I looked at it start to bounce, and we got rejected where, guys? At the dotted line, which is our pre-market lows. As soon as I started to see the rejection here, we're also still below the 20 SMA. This candle here at 6:45 a.m. Pacific Standard Time, all I'm going to do now is take the confirmation as soon as we start to break yesterday's lows. So I went ahead and got in at 263.75. I bought 10 options contracts, and I bought the 262.50s strike prices. You guys already know me. If I can get $1 off of Tesla, I'm going to sell half size, and then every 25 cents, 50 cents, $1 down, up until I get to around $2, $2.50, sometimes $3. I'm going to go ahead and continue to scale off my size. So you can see here at 6:45 a.m., not only do we drop from a price of 263.74, we drop all the way down to a low price of 262.60s. So we get about $1.10 off this initial move. And to be quite honest with you guys, I just sold at $1 because I was already looking at the candlesticks here. Very extended move down. I didn't want to get chopped up. I was up $480. If you guys want to see the P&Ls, go to my Discord. All of that stuff gets posted by myself and the rest of the traders who are taking trades. It's all down there. But if you look at the price action, getting that $1 And making $480 within a matter of 5 minutes is tremendous. How long would it take someone working a $20 an hour job or a $25 an hour job or even a $30 an hour job to make $480? I made this in 5 minutes. So you have to put things into real life, into a real life perspective, meaning that if you can make $480 and it comes that quickly in a matter of 5 minutes, you've got to think about taking your profits off the table and continuing to just, go along with your day, because at any point in time, the market can completely reverse and take away those profits. So again, anytime I can make over $400, $500, $600, $700 sometimes, I'm definitely going to take those profits off the table, and I'm definitely going to look for a new setup later on in the day. However, if you're trading smaller size, maybe you're only trading one contract, you should still be in this short setup here, even on the bounce, because we have to look at where this got rejected. If you look here where Tesla got rejected, guys, it got rejected right at previous day's lows. So these levels are going to act as supply and demand. They're going to act as safe zones where you can potentially look for trades. Now, again, if you missed the quick scalp here through previous day's lows, you could have waited for the bounce and then taken the low of day. And if you would have taken the low of day, that price would have went from around 262.25 all the way down to 261.50. So there was even 75 cents left in the trade. Even if you're going to give yourself, the reason why candle, right, which breaks down below the previous day's lows as a stop, you would currently still be in this trade. And we've touched prices as low as 260.24. So again, there's also ways to kind of play this where when we break down and then we do bounce and we hit that level of resistance, I know a lot of guys will take the bar that, starts to confirm on the downside. So this rejection here where there was no follow through to get back into this range between yesterday's lows and pre-market lows, you can see here, if you would have taken this trade, once price action starts to break the candle here at around 263, dropped all the way down to around 261.70. So again, it's about knowing your technicals, about knowing your supply and demands, and about being comfortable with the position sizing that you're in. Now, obviously, someone who, over leverage themselves and maybe they've got a $5,000, $10,000 account and they go and they buy 10, 12, 15 contracts of Tesla here, and then they start to see the bounce after their entry. Maybe they anticipate the break of previous day's lows. They try to anticipate the losing that level. They get in short before we've had any type of confirmation, and then we bounce. It could cause someone to go into panic and sell out, only to not realize that we had a level of resistance here and only to flush down another $2 or $3 later. So again, be patient. Wait for your levels, set up your charts in this manner each and every single day. Use a 20 SMA, use previous day's low and highs, as well as the pre-market low and highs, and then kind of play those zones and take profits into these zones. So on the way down, you're taking profits into these zones. When we bounce, you're looking for the rejection into these zones. When we do not make any confirmation higher to the next zone, look for the continuation follow through flush on a new low of day. I hope this video helps you guys. If you guys want to work with me, train with me, you guys want to trade with me, you also want to learn the rest of my strategy and everything and trade with the rest of the guys, get access to the video courses, make sure you guys become a member at evolutiontraders.com. Also like, comment, and subscribe. Leave me a comment. I'd love to know what you guys traded this morning. I hope this video helps you guys. If it did, please, I would appreciate it if you could just hit the thumbs up button. It helps this video get out to more traders. Again, a lot of you guys are watching these videos. Not enough of you guys are hitting the thumbs up button. Do me a favor, hit the thumbs up button, and I'll see you guys all later.